All right, good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your weekend video. So let's just do a quick recap of last week. I'll take just a quick minute or two and talk about last week's option activity as well as what we saw in the overall activity. And it was really crazy. I'm just kidding. It was a very slow week last week. There was just a lot of consolidation, a lot of fake moves. If you were reading the tape like I was, and looking for trade ideas last week, they were few and far between. Right, a lot of false moves. It was a frustrating week to trade last week. A couple days it looked like the market wanted higher in the morning. It kind of felt very similar to what we saw back here. So with the S&P chart, notice that we had a couple candles in the beginning of the week where we tried to go higher, and we got the not so fast where we just weren't ready to do it. And it's very similar to what we saw back here, right? Back here we had one really nice week or week and a half of a move higher, and then all of a sudden just the market wasn't ready to go higher. Buyers weren't coming back into the market, and we had that 3 or 4 days where we started the day higher, and it looked like we were going to catch some momentum, and there was just no follow through, both on in the cash market as well as options market as well. I look at both, right? I look at both for a good gauge of what the fast money players are looking to do, and the aggressive call buying, as well as just the regular investors, the investment managers who don't use so much option flow. Again, very good to look at both and not just one. You could be missing out on a lot if you're just looking at one in particular. So regardless, so it just felt it felt very similar to what we saw a couple weeks ago. But remember what we saw after that, right? And it kind of washes some people out. We had that 3 or 4 days, and then all of a sudden we launched higher for a couple of days. So I am not worried about this at all. Could we get a pullback with FOMC this week, and barring some other headline? Last week was a very headline driven week. Of course we could, right? So you have to always be kind of in this market, have that in the back of your mind. But this consolidation for 5 days has led to some good things afterwards. So again, just keep in mind what we did here, and we went higher for a few days. Again, we did get a pullback after that, but I think this week could be setting up. And just because I think that, I want to let things, I want to see those aggressive call buyers come back, and I want to see some volume come back in a couple different places. It really was there wasn't a lot. Last week just didn't have a lot going for it. Even sometimes we see a bit of a rotation where, clearly, if we go to the FDN ETF, which has been one of your better performers, clearly we saw some huge outperformance in the tech, the FANG, the semis, and small tech, right? I mean, the enterprise software names. And what I was expecting, and I think was kind of logical, is that, hey, maybe we'll see some other groups, we'll take the baton from tech, because that's what we've seen a lot of the time in 2017. One sector gets hot, and then another sector gets hot for a little while. But we didn't see that at all. We really did not see one particular sector. A couple of the defensive areas got really beaten up. Those saw a small bounce, like the utilities, but we're talking a small move. I mean, this is not something, to me, that I would really want to get involved in, unless we see a lot of a ton of bullish option flow, that where somebody's really looking for I guess a value play, and for something to catch some momentum. But it was your utilities and your REITs that outperformed last week. So yeah, maybe they were due for a bounce. I actually had that in my newsletter last week. I said, watch this REIT group. That was in the fund flow section of the newsletter. I said, watch this REIT group, possibly setting up for a short squeeze, because there was a lot of money that was that was taken out of the whole REITs group. Well over, I think, I know at least over $1 billion. I want to say around 1.5 or 1.6 billion dollars were taken out of the REIT sector when interest rates went higher. So yeah, they got a little bit of a squeeze last week. You could see a lot of green bars. So honestly, I did not play it, but I did think that the REITs were setting up. I didn't say utilities, but I did say REITs were setting up for a bounce. So anyway, we just did not see that rotation next week. So we've got a lot of sectors. I went through a lot of charts this weekend, and they're kind of, I think they could, some of them could catch momentum. They're just, to me, not really showing. I think you just have to kind of wait and be a little bit patient and see a little bit of confirmation first, rather than just diving into some groups. But before I pull the S&P chart away, the couple things to kind of take away from here is last week we came into the value area for the month of March. So not really what I wanted to see. And then, but the positive here is we did not break the 50-day moving average or the 20-day moving average. That actually acted as a little bit of support. So I just attribute this to a lot of chop. And again, it's you don't really want to, just because last week was a bit boring and a little frustrating. To me, you want to just come back to this principle of you don't want to short a market that's just because it's boring. Which it was last week, and it's going to be like that from time to time. And the other thing is we had such a great January. We had a very volatile beginning of February, and those traders want to see the momentum and they want to see moves. So for us to just have 1 week where we just did nothing, it's frustrating, and sometimes you want to make more out of it than it actually is. But it's just how it works. Being in the market, I've traded pretty much through every market environment, and sometimes it's just boring from time to time, and you just don't see a lot of buyers that come in. And also look at the SPY chart. So I'm going to go over last week's option activity. Don't worry, but look at the volume last week in SPY. It was trading about a couple of days. It was 60% of the average volume. A couple of days it was 70% of the average volume. So really light flows, and I thought it might be even I thought, I was surprised because I thought there might be a little bit more volume with quadruple witching. As you have to remember what happens there. All the indexes get rebalanced. So that could have also been a little bit of reason why we saw all the FANG stocks underperform a little bit. The winners have to get sold for those index rebalances, right? Just keep in mind, you look at any one of these ETFs that's market cap weighted, all the FANG stocks have had such good performance. So if you look at you can look at any of these, but if you want to look at XLK, the top performers, what happens is in all the indices, right? It's well, just to take some of these, they're market cap weighted. So what's the variable that changes? Because they only restrike these sector and spider ETFs. They do that once a quarter. So they do that in June, March, January, March, June, and September. The variable that floats from quarter to quarter is price. So the weights don't, the shares within, or the positions within these ETFs do not change at all between quarter to quarter, unless there's a one-off where they decide to when there's a reorg or something like that. But that doesn't change at all. What happens is the prices are free to fluctuate based on market conditions, and then what happens is at this March quadruple witching is they actually put them back to their benchmark market cap weights. So names that have really outperformed get sold, and the losers, the names that have underperformed, actually get bought. I know that's a weird concept, but that happens. So that could have also been a little bit of a contributor for last week. All right, so that's a lot to talk about. I said that was just going to be a couple minutes, and I went into a few more minutes than that. So let's start to talk a little bit about what I see. And I like to kind of pour through the newsletter that I set up. But yeah, one of the major subject of the week I have is patience, and to just be careful, not overtrade. So what I'm looking for next week, and it doesn't have to happen on Monday. It could actually happen after the Fed meeting. We don't know, which is a 2-day event. Wednesday is the actual event. And they are going to increase interest rates. It's 100% probability, but everybody's worried about the language and how many that we're going to get. So maybe we see what we saw last week is investors sit on their hands. What I do every day is I watch option flow. So I am going to be able to tell that right away if we start to see aggressive call buying come back in. It's a great indicator to see if there's aggressive buyers into this market or if they're just going to sit on their hands. So there was some interesting trades from last week, and I'm going to go over those. But it will basically take, we could see from last week, like this is my sector scorecard, and you had a lot of progress that was made, and maybe perhaps the momentum got a little bit too hot here. This momentum rating that I have, the scale goes from a -12 to a +12. Notice many of these were pushing the higher end of the scale, and that's as far as they can go. There's no 13 on this. The most that they can get to is 12. So we were running a little bit hot a week before. Some sectors kind of caught up a little bit, but this is how they look now. So basically kind of a mess. We don't see anything with rising momentum except for utilities. But again, it could just take one day where buyers come back in, and it really can change this momentum scale that I use. It's a proprietary indicator that I use called the Raptor indicator, but it could really flip around just in one day. That's how quick that can change. And the other thing is, I would also mention sentiment. I think the fear and greed index I don't have up in front of me, but I took a look at it at the end of the week. It's reading fear, right? So that's what also kind of feels like it gives me a little bit of a hint. Now things could get, of course, it's not all the way like it was back here a couple of weeks ago where the fear and greed index was like a 10. I think it's right around like a 30 right now out of 100. So you got a little bit of a pullback, and that makes sense to me. So again, we're not in exuberant times at all right now. Maybe still tech is still running a bit hot in terms of sentiment. But overall, I think that's good, right? The fear, with the fear and greed standing at fear, we want to be looking at opportunities when there's when the case is that everybody's a little bit scared and not over the tips of their skis in terms of positioning. All right, so that's what that's a quick rundown, and I could look at Qs. There's just not a lot to really go on here. There's a check back here into the top of value. I think that's positive, right? So we got a breakout, and this is basically standard trading using the value areas, right? You want to see a breakout side of value, and then a retest a lot of times. So you're coming retest right into support. Right, so that's not bad for the Qs. IWM was actually a little bit stronger. I think on Friday, did not. This is not a buy signal. It was a green bar, but it's not a bullish engulfing candle. So again, it's kind of a wait and see. I think the mid caps are also a bit interesting. Into support as well. The diamonds, I think, are kind of make or break right now. I thought I had this drawn, but I guess I don't have it anymore. But yeah, it kind of looks like a triangle pattern. Maybe I have it on the S&P, and we're just kind of, this one I would watch closely, the diamonds, because this is not showing much of anything right now. We're right smack in the middle of the value area, so we'll have to keep an eye on the diamonds. But yeah, going back to the Qs, you've got your defined support here. That would be 170.23. And could you imagine, let's just play this out for a second, right? Let's say that we do get another red day in the Qs. How nice of a setup would be right into here. 1, 2, 3, 4, maybe 5 red candles. So there's 4 red candles, but I'm just saying, if we do get a little bit more volatility in the beginning of the week, how nice will that set up for the rest of the week and after the Fed meeting? So that's also what you have to kind of think about too, is maybe not just, hey, I really want to be buying stuff on Monday, but hey, how nice will the setup be, if we get through the beginning of the week? So again, it doesn't have to happen Monday, but again, 1, 2, 3, 4 bars, red bars in the Qs might be setting up pretty nicely here. All right, so let me continue with just going over a couple other points in the newsletter. I'm not even going to go into, so here was the best performers, and there's a couple interesting hints here. Not so much in the U.S., it was pretty ugly across the board. Pretty, a full week of basically non-participation. Like I said, utilities and REITs were the only thing that outperformed. Everything else was basically red. So, you know, possibly a really nice setup, I think, going into this week. International performers. There's a couple of really interesting ones in here that I will share with you. Look at the Egypt chart. This is actually your best performing international country year to date. Look at the strength in Egypt this year. Really, really strong out of this base. And by the way, go all the way back here to the 200-day moving average. This thing has never come since it broke the 200-day moving average. So just a good example. I am not in this ETF, but again, I'm always looking to spot trends. This one obviously late, but look at the breakout from the 200-day moving average, really strong. So I do have a couple ones in here. There's the Saudi Arabia ETF, which saw some decent inflows last week, and a little bit of consolidation after that big move. So one of the thing that kind of and again, so maybe a little bit extended here in the short term, but if you're looking for some different types of trades, let's see if I can bring this up here in ETF flows. So I'm kind of going in different directions in this, but yeah, but take a look at the inflow last week. So again, you have to kind of look at things. I like looking at my Bloomberg charts because I could quickly just go to a 5-year chart. But yeah, I mean, this is, I think, the biggest inflow into this ETF. I'm not sure if it ever. Yeah, I mean, it kind of looks that way. It's a newer ETF. That's why you kind of have this back here. But look at the trend. It's a really nice looking trend. Maybe you might see a little bit of a pullback, maybe into here, into this 28 zone, and something nice to put on in cash. But yeah, I mean, look at that. Right, so that's kind of what I look to find is buying that's very different in some of these countries, country ETFs as well as regional ETFs, as well as anything sector-wise or group-wise in the U.S. So that caught my eye. A couple other, I'll stay international here just for a minute because I do like a couple other setups here. Malaysia, EWM. Since this thing got above, again, a big downtrend, nice looking base here. It popped above the 200-day moving average here. And since then, it hasn't really looked back. Now, look at this. It's not really extended. You could see there was a bunch of buying in this back towards the end of the year as well in January. And it's just sitting on the 50-day moving average. So this is one of my favorite setups right now in international ETFs. And I may look to put this trade on next week because it's just sitting on that 50-day moving average. And I'll know if it breaks there, I can get out quickly without a big loss. But I think it might be a buying opportunity. Maybe I wait, to see this to get over this particular line. That would be good, and for a break higher. So I could probably start a starter position in the beginning of the week against that 50-day moving average, and then if it breaks here, then add a full position in the Malaysia ETF. Also, another ETF that I like a lot that I'm already long is the China ETF. That looks like it might be ready to take that next leg higher. So just above 73, call it 73.12 or 73.10. I like this ETF a lot because it's kind of a combination of FXI. Right, FXI is mainly, if you've ever looked into these ETFs, which I strongly encourage you to do, to look to see what you're holding. Some people just like, oh, it's China, it's FXI. Well, what are you what is the basket of securities? Do you want to get long Chinese banks, or do you want to get long Chinese internet companies? FXI, for example, is mainly banks and financial companies. There's some other companies in there too. There's the Industrial and Commercial Bank, but there's China Mobile in here as well. But it's a lot of banks. So I've always find this interesting that sometimes individual investors, because nowadays you have choices for ETFs. You have a lot of different choices. There's about 10 different Chinese ETFs. So yeah, if you add up the insurance companies as well as the banks, it's roughly it's almost half of the ETF. Now there's a little bit of internet in there. I just mentioned the China Mobile. I wonder if that falls in there, or Chinese telecom. But look at the difference between the FXI ETF and the MCHI ETF, right? So you still have the banks and insurance companies, but they're only 23%. Internet is 41%. And you also have a few other sectors in here as well. So that's why I like this ETF. And if you wanted straight internet companies and technology, then I would do the KWEB ETF. Right. By the way, look at the investment in this ETF over the last year. It's been huge. MCHI has done well too, but I like the setup right here. It's not overbought. It is in a swing up here. Maybe it takes that next leg higher. Speaking of that KWEB ETF too, that also might be looking ripe for a 52-week high at some point. Who knows? Maybe this week. It's been a very, very strong group over the last couple of years. All right, so that's international land, and I didn't mean to do that right away, but just go ahead and knock those out looking at last week's performance. ETF flows, I usually spend some time going over this. The main thing from last week, and I try to provide value where I can, but there is $17.4 billion of inflows last week. In my opinion, complete noise. This happens every quadruple witching. The numbers will be heightened. Because again, here's the quick explanation, and I'm not going to dwell on this, but I used to do this. This is what I used to do for a number of years. I was a ETF market maker. I used to make markets for hedge funds and trade big blocks of ETFs in basically every area that ETFs dwell, which is U.S. sectors, international names, fixed income, commodity, everything, right? And one thing I could tell you, because I used to actually do this, but broker-dealers, APs, authorized participants, they collapse their positions ahead of quadruple witching, right? So sometimes market makers and the ETF space will be sitting long a basket and short the ETF. And what they'll do is they'll collapse that basket so that they don't have to worry about doing that rebalance that I talked about earlier, and it tends to really bloat the moves for the week. So if you read about, please, if you read about, because some places like, I don't want to call anybody out, but there's a lot of news agencies that are really delayed with putting out this information, and they're gonna put out these numbers in a couple days, and everybody's gonna be like, oh my God, that must have been the market top. It's not. It's just the normal quadruple witching flows that happen every single quarter. This happens, right? Just don't read into them. There's a guy on Twitter who compiles this data after December, and he's like, "Oh my God, it's the market top. They put in all this money at the very top of the market." That wasn't the case. So so I'm really not going to go too much into this. Just two areas, maybe international. I'll stick with the international theme because again, it's very difficult to read what they're doing here. I just kind of ignore this week altogether. But international emerging markets regained the title for the most international inflows for the week. $1.2 billion. Also developed market ETFs, $950 million. That is mainly through this EFA ETF. Take a look at some of these flows with this stuff. It's pretty ridiculous. So if you look at IEMG, this ETF I don't think has ever had an outflow. That's crazy, right? All those green bars are inflows going into the ETF. It's never had an outflow, never, since this thing has been created. IEFA is similar, but not quite as extreme as that. But you could see all the money that's been going into that one. I think it had one outflow. All right, these are the iShares products that they've been encouraging everybody to go into. But on the other hand, what's been really weak, and this is kind of why I have not gone back into Europe right now, because there's been a lot of outflows. So look at VGK, look at the red bars here; those are outflows. And so I kind of want to wait until they're done unwinding. Look at EZU, had a couple big outflows about a week ago. I think EWG did not have any last week, but they had some a few weeks ago. Maybe further back than that, maybe back here. There actually hasn't been much going on. You can see no flows. So it just doesn't have momentum. These Europe, for whatever reason, just does not have a lot of momentum. So I'll kind of wait for a little bit. I was talking to somebody in the trading room about they were thinking that there may be a double bottom going on here. I said, yeah, I agree with you. It could be a double bottom here and here, but these things haven't even gotten above their 50-day moving average. So I'm going to wait personally for let the price action prove it to me, considering that it failed here, did not break down here, which is good, but it's just sitting at the 100-day moving average. It just doesn't look like it has momentum, kind of like a lot of U.S. sectors right now. All right, so that's a lot of international, but there's a lot of opportunities in different things. I also like EWZ. EWZ, Brazil, saw some inflows last week. You could see sitting at the 50-day moving average. Keep an eye on this Brazil here. I also spent some time last week on India. I put a trade on. I was able to take 2 profit targets, and then it's back to the 200-day moving average for this EPI, and it was very weak on Friday. So it worked in the beginning of the week, but the last portion of that trade, and I just picked a small option trade. So I was able to hit 2 targets, but it's back at the 200-day moving average. So it'll be interesting to watch this India chart and what happens in that market next week. Notice no flows either way. All right. So what am I watching for next week? Some individual setups. So finally, I'll go over the option activity for last week. So one thing to notice here, and that's why I have impatience, it was a bit quieter than weeks past, which is fine. Sometimes we're just, it's like that. And also there was a ton of rolling of positions. Whenever that happens with a monthly option expiration, there's a ton of rolling of the positions. So that's a bit noisy as well. But a couple of trades that I thought were interesting last week. Let me go to the one on Friday. Let me go to a little bit of Friday's flow. And I'll talk about lows. I put this trade on Friday. 5,000 of the July 85 calls. Right, so there's no unwind or anything like that of March or, but they put on a pretty decent sized position. Notice what they did here. 5,000 contracts, but all small contracts going up for 650. And, so if you add this up, 5,000 times around like 6.6 gets you to be a pretty sizable trade, $3.3 million in that ballpark. And look at where Lowe's is. It kind of looks pretty ugly, right? Since they had earnings, they've gone down from 108 to all the way to 85 bucks, and now somebody's buying it. Doesn't that, to me, doesn't that look attractive? And a move all the way back down here. Here's what they did on earnings, and they've been consolidating since earnings. And you've got the support of the 200-day moving average. If you're not in this trade, watch for the MACD crossover for confirmation. Sometimes these things will fake out. Sometimes they'll just be about to cross over and they don't. But I did go ahead and start this trade, and they gave you plenty of time in July. So for now, for me, my stop is the 200-day moving average. Again, you should always know when you get into a trade where it's not going to work, what your support is. So that 200-day moving average, if I wanted to even refine it a little bit further, so that, because this is all the way down here, which, you would lose money if it does get past that 200-day moving average. So maybe this right around 85, call it 8, so $2 down. If it doesn't work there, maybe it sees more consolidation at the 200. But again, always have to worry about the downside first. The upside is it's got to $89 is where you get to the earnings gap. But again, I mean, look at this thing. It's sitting here, and it's you could actually just take this out for a minute, forget about how this happened, and just watch that 200-day moving average and say, hey, it's just right along that trend line. All right, so I liked it. I thought a sizable trade like that, $3.3 million. And again, sometimes you can get into these things for a little bit cheaper for July if they're going out that far. I made this into a call spread for now because the premium is going to be a lot, and I just felt like, hey, it hadn't had that MACD crossover. For now, I'll make it into a call spread, and then I can trade around that. Maybe if I want to buy a little bit of calls. If we do get that confirmation of the MACD crossover for a swing trade setup. But I like that. So that's one of my favorite trades from last week, and it happened towards the end of the day. That buying happened in mainly the last 2 hours of the day. All right, so that's lows. Couple other trades that saw some option activity. I've got a whole list of stuff to go through, but this Penn National Gaming I think is interesting. We saw some more casino call buyers. They came in several times during the week for Penn. At first, in the beginning of the week, they were buying some Aprils. I don't know if they completely took off the Aprils and just went into July. But again, another trade giving it plenty of time. July 29 calls, up here, top of value. And again, not extended or anything like that. Yeah, and you've got your support, 26. While I'm with the casino names, IGT, they put on a really nice trade in IGT last week. Now they bought there was some smaller flow in this, some smaller aggressive flow, but look at this nice 1x2 April 32-34 call spread. I think they only spent, and I talked about this one day in one of my weekly recap videos. But they spent, remember what they're doing here. They're buying, how a 1x2 call spread works is they bought 5,000 of the April 32 calls, and then they're selling twice as many. So they put this on for net cost of 15 cents. Look at the technicals. We actually have to scale out here a little bit. But you have this purple line up here. Right? What's the strike? 32.34. So you got this VPOC sitting up here. Might be where this is getting to. So they're thinking that in the near term it does not get up to 34, but maybe it does get to 34. So watch, keep an eye on that name. And again, came in, sold off Thursday and Friday. So you got a little bit of a pullback there. A few other trades. Logi, I took this trade last week. I was able to take part of the trade off, but just kind of sitting at that 50-day moving average. Watch, it has not had an MACD crossover yet. Again, watch for that. So just like I mentioned with lows, but again, sitting on the 50-day moving average. So nice support, right? So there wasn't a ton of trades last week, but there was definitely some interesting trades that hit the tape. A few other names that I'm watching. Let me just cross. X, I could talk about this name a little bit. Big chunky order flow came in on Friday. We traded this for a day trade. So perfect. So, this is a textbook way of kind of think about how to manage this trade, which I know in these videos I don't talk about trade management. I talk a lot about that in the trading room, but you don't hear that if you're just watching these videos. So they bought 10,000 of the April 42 calls. So perfect for a day trade, right? I think I hit 3 targets in this trade on Friday. So did many other traders in the Tribeca trade room. So what do you do with this trade? They bought April, right? We got this big move up. Let me zoom out here. We got this big move. I mean, when they first started buying, when the 10,000 block went up, and again, I'll match it to the time, which I know a lot of people who don't do that when they look at this stuff. But the block went up here at 1022. Is this right? Yeah, it says 10:22. Maybe this is off because of daylight savings time. I'm not sure. Oh, yeah, it could be. Sorry. So this is not. This is for whatever reason is off because of daylight savings. I have to. I did not pull up my favorite charts, so just ignore this time here. So this is actually 10:22. I knew this was something wrong with this, even though it says 9:20 on the screen. This is 10:22. This is where we saw the call buying, and we ripped higher. So what do you do with this trade afterwards? I personally do not want to hold any April at this point. So what you could do is take your profits, maybe leave that last piece on, and play for a bigger trade. Because so what did they subsequently do after this trade? They bought October calls. So maybe I know October is for some people who trade short-term options is a huge distance away, but maybe just mess with your profits and go to October and let it see where it wants to run. Because if you look at this chart for U.S. Steel, right? It's had a significant pullback from this big move up. It hit 45 bucks. I was in the stock, and I rode this U.S. Steel all the way from the 200-day moving average in my cash trend portfolio, all the way up here. And maybe I held it for a little bit too long, but I still had huge profits in that trade because I got in on the 200. And I think I got out on the 50-day. So it's got to get over the 50-day. Maybe one more big green candle, to go in U.S. Steel. If not, if you're in October, you're just messing with the profits, right? So a great way to kind of use option activity, big winner for a day trade, and then leave a runner on. And get out of the April. April's too short term, too much theta decay, in my opinion. Which is a whole nother subject when I went into on towards the end of last week. Very against short-term option plays. At this point, if you're going to have another week of chop like we had last week and you're sitting in April calls, good luck to you. You have the now that April is the front month, and if you're in April, you're dealing with very high theta decay. So again, I went over that in last week's video. A few other trades that caught my eye. A couple of the industrials. I would love to see some of the industrials catch besides Boeing, but look at Deere, showed some signs of life. Maybe it gets above that 50-day moving average. Same thing with Caterpillar. Almost identical looking charts. I think Deere looks actually a little bit better. So watch for, some of these names. Again, you could just kind of put alerts on them and wait, put these names on your watch list. And if you see the option activity, right, we want to be prepared so that we know what the chart looks like, and then when we see the call activity, we're not messing around looking at what does the chart look like? Well, we've already done the research. We know that Caterpillar and Deere are in this consolidation zone, and they just need some big buyers to kind of take it out of here. So I would watch this one, watch the 50-day moving average, and then a break above this 167 3/4. All right, so that's a bunch of names. Going back to the tech space, and again, not much. There was a couple orders in Nvidia last week. I think it was in the beginning of the week. Let me see if it was the beginning of the week or if it was the week prior. It looked like some calls were bought and some puts were sold. If I can find that someplace. Looks like I don't have that at my fingertips. But regardless, who cares? What I would be looking at is the technicals, right? 1, 2, 3, 4, 5 days of consolidation right on the breakout area, and it looks like it's trying. So it could get really fun and interesting if Nvidia gets right above here. Call it 251, and I've got my alert set. When that alert goes off. And I think at this point, like a close above that level. Notice all of these bars mainly at some point got above the top of value for March, but did not close above there. I don't want to say failed because we're still above all short-term moving averages, which I think is very positive. And if it doesn't get above there, if it doesn't get above 251, then move on to something else. But I think it's got a chance to break out. Also, Microsoft. We saw a lot of Microsoft calls last week. I tried Microsoft for a day trade. in the room last week, which didn't really work. But again, just like I was looking at the Qs chart in the beginning of the video, I know this video has been going on for a while now, so we'll kind of cut it short here in a minute. But just like the Qs chart, a breakout and just a move back into the top of value. So I like that. You know, I like the Microsoft chart. You just have to be a little bit patient. A few other names. JBL. Keep your eye on this name next week for a momentum play. Now, it did take that VPOC out, which is usually a great place to take targets. And if it can maintain above that blue line, as well as get above this, certainly we've seen a number of these small cap tech, once they've had good earnings. I mean, you know what happened with NTNX. You know what happened with Vive. You know what happened with Splunk. You know, all after earnings. Big pop on earnings and follow through. So watch this JBL next week. It may be worth a shot. But I would watch. It's got to get above this, you know, basically the high of where it reached on Friday. But definitely on my watch list for next week. I talked about NVIDIA. I talked about this. Oh, AZN. A huge amount of open interest on the 35 strike. And look at the candle on Friday. Oops. Thinkorswim doesn't like what I just tried to do. But keep in mind, I think there's about 25,000 open interest on this line. Talk amongst yourself while this is coming up. The April 27,000 open interest, and they've been accumulating that all last week in AZN. Watch that 50-day moving average. Break above there, I go long. Couple other names. I talked about Logi. I talked about IGT and Penn. QD. I put this trade on back here. Took the trade off. Took half the trade off before earnings. On this day, I didn't catch the ultimate high. I wanted to hold it right until it reported earnings. Unfortunately, it gave me one of these candles right before earnings. I got out of half the position here. So again, a very nice trade from here. Again, it would have been nice if I would have got out at the ultimate high. It tried to go higher on earnings. It failed, and it's come back here, and we saw some more call buying on Friday in this one. So I actually took that position that I took off here and put it back here, right? So back to my original cost basis. So a nice, this is not a Chinese internet name. This is a Chinese finance name. I think they finance a lot of small businesses. So I like that. I like this base. Again, this is a newer company, IPO to here, all the way back down to here. And we'll see if we get some follow through next week in that one. BABA, of course, on my watch list for next week. Had that nice move. It is now broken out of the, so perfect, right? Broken out of the March value area. Let's see what it wants to do now. It's got to hold this gap. And if it does, you know, maybe it takes out the 52-week high. I'm still holding that one as well. All right, so that's it. That's it for today's video. There's a bunch of other symbols that I could go through here, but I think that's enough to go through. All the rest of the activity is in the newsletter, and I've got some names highlighted that I really like, or that I'm watching, either that I have a position on or I'm watching. I will tell you this, by cash trend portfolio, what I did was, you know, this is, you could see this portfolio. I adjust this throughout the, not throughout the week, but I do put on new trades. You know, this is not a super active portfolio. But for example, QD is in this portfolio. I added to that last week. I added FireEye last week as well to the portfolio. And look at what this thing is doing. So I put the whole portfolio into Bloomberg and I graphed it. Now, you know, it doesn't have all my portfolio changes back here, but this is how my current portfolio looks. And what I'll be doing going forward is adjusting this Bloomberg ticker. I could go ahead, it's a basket, and I can go ahead and adjust it. So as I go to, if I end up, you know, for whatever reason going to cash or making some bigger adjustments, that'll all get reflected into this. And then what I'll be doing is shooting a member video later just to go through. I've got right now 22 names on in this portfolio. So I'll be going through all the names and going through just giving you an update on all those names in the TTG cash trend portfolio. So if you are a full-time trader and you don't have time to look at option flow all day long, you could basically hire me to do that. Go to tribecatradegroup.com and you could sign up for your membership, and you have somebody who you're paying for to watch the tape every day and tell you what's going on. And then I will give you alerts as to when I get into cash positions as well as option positions as well, swing trade option positions as well. So if that's something that you're interested in too, and you can't read the tape all day every day like I do, then visit Tribeca Trade Group, and you can get a 2-week free trial as well, so you could see what it's like. And again, sometimes if there's not a lot of trades for the week, it's slow activity, but I want to let the whole idea is to let the winners run. I mean, if I would have gone crazy and gotten out of names, through here, this is following the trend. And that's the other thing that you're paying me to do, is to tell you when things change, and I will get out of those. It's a systematic portfolio, and it is crushing it is outperforming the S&P quite nicely. I got into FDN as an example on the 50-day moving average touch, which was right in here. I think actually on the 12th is when I got long, and that's been one of your best performers in terms of sector group ETFs year to date. So there you go. All right, thanks for watching the video, and enjoy the rest of your weekend. Thanks, everybody.